Hi everyone, myself Divya Basavala. Now we are going to speak about our project Tata Steel Accurus Chorus Merger and Acquisition. In my team, we are total 6 members: Aditya, Sai Pavan, myself Divya, Harsha, Ratish, and Krishna Anand. So now I'm going to speak about our topic. The first is the table of content. So here it is classified into several stages. So the first one is identify the change, vision for change, change management agents, change management framework, resistance and risk, implementation strategies, cost of change, feedback and evaluation. The next, this is the identifying the change. So these are so many identifiers given over in a horizontal acquisition cheaper than setup cost, and worldwide fifth largest steel manufacturer, RD complications and entrance in European markets. And the next topic is the change types of change management. Here this is given by three is description used for and who is impacted, and given by systematic project and organization. Given in acquisition in favor of marketing in cheap raw material into high value markets, or for the cultural integration of Indian employees with European employees and steel industry and participant in several ways. So it is been description in the types of management given over there. And the second next one is, please next go for the next, the forces of change. Here, the force of changes by given in the pie chart form. So I'll go by one. And the first one is knowledge economy, digital coverage, and the next one is new technology, privatization of resources, social culture reasons, electronic commerce, political legal reasons, mergers and acquisitions, cash consideration, blooming rise of technology. So the next part is vision for change. Yeah, given the definition of vision, where we need to be and where you are. The two types: integrated company with supply chain of and the leading manufacturer of quality steel at low prices. The next one, please. Okay, here we are given for the same the define for your vision, where you want to be and where you are. So this divided into two subtopics, like huge play in Indian market and European markets. So see, sorry, could you please go for the last previous slide? Yeah, here it is given into like two stages. So we can see over there the culture, costing, enhancing, and customer satisfaction by stage. Yeah, here it is the gap analysis: what, where, when, who, and how. The same given the current state, future, gap, and actions to close gap. We can see the cheap cost and the global playthrough, market size, and the previous per what is the pence per share. So it is given by every each and current for future and like for the next generation as well. Yeah, here the change management agents. So what types of like we can see here, the board sponsors, leader, and team members, stakeholders as well. The next, the change management board. As we know, there are so many change management board involved in this project team. So the first one is security, finance manager, survival manager, application manager, problem manager, business case representative, release manager, and change manager. This all comes under change management board. The next, please. Here the change management sponsors. This is also represent in pie chart like sponsorship, which is given green and blue color. That 33%, 33.33% cash sufficient, and 66.67 bank loan. The next one, please. Okay, role of key stakeholders, which are divided into five: the driving, active participation, willingness, and understanding. This all comes under like editable, which have been made according to the audience attention. The next one, please. Yeah, that here we can see the change management framework. It is a stage by stage process. The first one will be doing by process, plan, tools, and models. And the next one. Here, the change management process. This is a step-by-step stage process. The first one is initiative change request, which gives the identify the change, and the second one is review by change request board, which will be taken to select the process map based on the change request. And the third one is planning, which is used to identify the change impact and mitigate the risk and implementation and release strategies. The fourth one is implementation, communicate changes, align system and structure policies. And the fifth one is review, evaluate the effectiveness of changes and also to prepare strategies to manage it. And the last, sustain. We need to sustain in the project by maintaining the momentum and apply methods for continuous improvement. And now Harsha will going to explain about the rest. Thank you.
Uh, India has been promising future in acquisitions in all sectors, whether it is an IT industry, pharmaceutical, or any other business fields. So Indian companies are becoming more important characteristics in the global business world nowadays. It has been observed that since liberation came into effect, closed business environment of Indian companies has been changed in competitive environment companies, and they started undertaking acquisition to achieve growth and enhancement and position in the market. The future prospects of Indian organization are to build a higher value markets and develop the capability to deliver the world class services and products. So as to have a competitive advantage in the market, it is predicted that this trend will continue in future due to country's economic and political environment, and also innovative packages for financing the overseas acquisitions increase the pace of Indian organizations entering the global markets. However, overseas acquisition should be done with a strategic viewpoint and with the aim of new market presence, acquiring new technology stakeholders, successful association through business life. Next slide, please. So, as we see, Tata acquired Chorus for a price of 12 billion. For this purpose, Tata Steel had a debt of 6.14 billion and a bridge loan of 2.66 million. Tata Steel offered a price of 455 pence per Chorus, sharing values of Chorus at 7.6 billion. The price represented a multiple of 7.6 times the Chorus. The deal produced synergies between the two entities, but with the time succeeded to gain the interest of the investors and the stakeholders by showcasing the synergies gained by the merger, and the stock market reacted positively to the deal. So it can be concluded that because of the high debt deal, the shareholders and the investors were reluctant to deal, but the synergies of the deal resulted positively for the Tata, thus increasing the share prices and the ratio of the company. Next slide, please. And the change management tools we used are like the stakeholder analysis is one, change impact assessment, impact assessment, change effectiveness assessment, and change readiness assessment. The change management models. So we divided it into 9 models. So the one is Johari window, Carter's 8 phases of change, the Atkar change model, McKinsey 7S framework, the Berkey-Litwin change model, Leviat's diamond, Levin's 3-stage change model, bridge transition model, and change curve model. We'll discuss about the 3 main management models, change management models. They are the Levin's 3-stage model, Atker's model, bridge transition model. So Levin 3-stage change model, in this they do the unfreezing, changing, and refreezing. So it's like readiness to change, implementation, and making it stick to the plan. And these all, which the information we gave, these all factors are taken into consideration to make the change model. Next slide, please. The Atkar model. In this, we can see the graph where post implementation, concept design, and need is on one side, and other side is awareness, desire, knowledge, ability, and reinforcement. So through this, we can see a successful change. And the bridge transition model, uh, in this the graph, we can see the uncertainty, skepticism, exploration, and commitment. So from where ending to new beginning, there was a good graph.
Everyone, I'll discuss about Rogers technology adoption curve. In this curve, we have innovators, early adopters, early majority, and late majority, and laggards. Next, we'll talk about risk and barriers. In this, we do risk assessment, resistance to change, and resistance management plan. When it comes to risk assessment, we have a risk matrix where we categorize everything which is very high risk, which is medium, and which is low risk. If it's a low risk, we do not need any immediate attention. When it comes to medium risk, we have to do something about this risk. And if it's a very high and high risk, we need to control the risk immediately. A successful acquisition was observed in 2007 when Tata Steel acquired Chorus. The changes were required in both the companies for their respective reasons. Tata bid was important because they wanted to get into European market, and Tata is the low-cost steel manufacturing company in the world, and it produced long and flat steel products, while Chorus manufactured high-cost stripped products. Chorus, being an international firm, had more global recognition, better and upgraded technology, and advanced research and development facilities. Tata's cost of acquisition was lower than setting the greenfield plant and marketing and distribution channels. For Chorus, the deal ensures their way out of debt crisis on it. The total debt of Chorus was too high at that time. They could have also access to cheap, high quality iron ores from India. Chorus cost of production was high, and acquisition with Tata Steel could make them use their advanced technology with cheaper, high quality raw materials, ensuring their cost to be under control to enhance their profitability. These are the main factors for the change. Tata vision was to enter into the global market by acquiring Chorus, which was then the top 10 steel making company in the world. Chorus vision was to enhance its product cost and also to chalk out their debt crisis. Here is the resistance assessment survey. And we have the area of resistance and its description. And resistance to change. And then comes implementation strategies. It includes change transition plan, communicating the change management training, timeline for implementation, sustaining the momentum. And here is the change transition plan, how it changed from every milestone and from the changes that happen from month to month. Like we have management, HR, staff relocation. In Jan to Feb, we had the preparation, then the announcement, then grievances, and then we hired new people, and then a team was formed. And it continues the change transition plan. And here is the change transition curve. Then we have change management communication. We have 4 different groups: industry, corporation, groups, and individuals. We have PR, teamwork, clients, vendors, surveys. And in corporation, we have surveys, corporate newsletters. And in groups, team development, kickoff meetings, and team coaching. And when it comes to individuals, we have soft skills training, coaching, conflict mediation, and targeting email. And different types of communication we used in this change management is department meetings, one-on-one meetings, town hall meetings, brown bag lunches, training courses, and workshops. When it comes to alternate under direct control of management, we have emails, corporate newsletters, frequently asked questions, internal memos, posters, and intranet. When channel is not under direct control, we use marketplace changes and customer inputs. And we have change management training, like session modules, learning outcomes, objectives, length of training session, target audience, delivery mode, and facilitator. And from here, Aditya will take on. Thank you.
Hi, thank you, Pavan. Uh, the deal was not cheap for Tata as it has to pay a premium of 70% over the average closing market share price, trailing for the 12 months. And it's a huge amount for the Tata Group to pay. The consideration for the deal was made out in cash. It is implied a cash flow of around 55,000 crores from Tata Steel's balance sheet. Tata, she, Tata Steel could manage the payout one third of on their own and remaining around USD 8 million. They took an 8% loan. The share price after the acquisition was announced fell as the Tata had an annual interest obligation of USD 640 million per year. The deal brought great changes as per the Indian manufacturing concerns, as it was the first time when the cheap, high quality iron ore was processed at a relatively lower price and were sold to a high margin European market. The benefits arising from such an acquisition is multifold in nature. There were revenue synergies for Tata Steel as it can now sell its products to European markets as well as the Indian market. There was cost saving energy for Chorus, as now Chorus could manufacture high quality steel and relatively cheaper steel divisions, which it was manufacturing earlier. Also, Chorus was having operational losses whose advantage was taken by Tata Steel. They acquired it from a subsidiary Tata Steel UK, which could help in tax saving from the group for the group. In Indian companies, acquiring loss making companies can take tax rebates for 3 years. Operational energies where for both the companies as Tata could use their R&D facilities and grow more with developed steel products. Chorus had a way of using the cheap iron ore distribution in India and could operate on a lower cost model. Also, there was cost reduction as multiple staffs were reduced by identifying functional duplication. The rents and other variable costs were reduced as by consolidating offices, warehouses, etc. Also, the supply chain was optimized and minimum wastage were generated. Financial energies also arose as a part of revised equity and better market share and market price. And these are the change management timelines from April, June, July, September, December, and February. These are uh, a quarterly 2 to 3 months uh, timelines. It has a difference of 2 to 3 months where we can see the diagnosis, design, develop, and deliver. And these are the few things that we notice here. Yeah. Sustaining momentum. Sustaining momentum is where we see the momentum of the company, like after acquiring how the Tata Steel has developed the Chorus Steel into a huge steel manufacturing company, providing resource for the change, uh, building a support system for change agents, developing new competencies and skills, reinforcing new behaviors, and staying the course. Cost of change management. Change management cost. So we got it for 5 task names: the top-down plan, strategy, change readiness assessment, execute change, long-term sustainment. And we see the 4 quarter sales in that from first quarter, second, third, and fourth, respectively. 80,000, 15, 20, and 20 each. Feedback and evaluation. We take the feedback from the change management and change management experience, change management performance dashboard, timeline for implementation, and sustaining the momentum. These are the results from effective leadership at all levels. We see 82%, 15, and 2 respectively. Strong sense of shared purpose, one that is inspiring and engaging. That is 78% and 23% respectively. Strong customer focus is 68 and 32. Employee involvement and support for change 66, 31, and 1% each, respectively. Commitment to learning and change 57, 41, and 1, respectively. Speed of delivery balanced with effective governance is 31, 62, and 9 respectively. Understanding of the impact of the organization on society is 25, 60, and 18 respectively. Change management experience, we see a line graph here. It's 16%, 46%, 77, and 96 is the excellent. At the N is equal to 165. Here are some of the charts and graphs, which is a proof of success for the Tata Steel after the acquisition of the Chorus Steel. Here is a line chart that we see, which is the expenditure of the Tata Steel comparing with the Chorus Steel. It's mentioned in billions dollars. And this is another graph, and these are the bar charts, stock charts, which we explain the Tata and Chorus size. This is the one other line chart. Acquiring a company by another is referred to an acquisition, takeover, or buyout. Is that Tata Steel has acquired the Chorus Steel, which is in a situation that it cannot run the company and the production has been into lower down. So there are two related and unrelated company combined in order to reduce the cost of their offering and increase their efficiency to serve the customers better. While in acquisition, there is a target company and acquisition company. The acquiring company enjoys the majority stake in ownership rights of the target company. The benefits that arise out of M&A are known as synergies, and it denotes that the sum is always greater than the individual company benefits. And thank you.